Well, you know what time it is. It is time to look at the distribution announcements for Group C of YieldMax. We'll also take a look at RoundHill and Defiance funds that will be paying out this week as well. And then stick around because later in the video, I'm going to show you a play that I did and I made $300 in one day. Hello, my friends. This is Legend. We have our announcements today. It's always good to get a little money coming into our pockets. So let's take a look at the Group C for YieldMax as they are going X tomorrow and will pay out on Friday. And in Group C, we'll have ABNY, AMD, Coney, CVNY, Dre, Fiat, Gimme, Hui, MSFO, Nefly, and PYPY. And also we'll have our weekly pairs, which is CHPY, GPTY, LFGY, QDTY, RDTY, SDTY, SLTY, ALTI, YMAG, and YMAX. So let's just go ahead and jump right into those and see what YieldMax Group C and the weeklies are going to be paying out. Okay, so here is the YieldMax ETF announcements for the distributions of Group C. And this is for September the 17th. And we'll start right off here with the weeklies with CHPY with 42 cents, GPTY with 36 cents, LFGY with 46 cents, QDTY 17 cents, RDTY with 29 cents, SDTY with 15 cents, SLTY with 55 cents. ALTI, we're getting at 9 cents again for this week, and that's an 85.6 distribution rate. YMAG with 13 cents, and that's a 45% distribution rate. And YMAX with 12 cents, and that's a 52% distribution rate. And since the prices of these have gone down, the distributions have gone down as well, right? So let's just go ahead and take a look at the ones that are going to pay out every 4 weeks, and that would be in Group C itself. And we've got ABNY with 24 cents, AMD with 24 cents. That's a little lower than I wanted, but I'll take it. Coney with 45 cents, and that's an 80% distribution rate. Not too shabby. CVNY with $1.90, and that's a 60% distribution rate. Not too bad either. Dre with $1.56, and that's a 42% distribution rate. Fiat with 18 cents, and even at that low price, that's still an 80% distribution rate. Gimme here, that one did not announce this week. It will not announce until the next round. So for that one, we'll have to wait another 4 weeks before we find out what the first payout will be for Gimme. Then we have Hui for $3.86, and that's a 73% distribution rate. That's pretty nice. MSFO with 31 cents, Nefly with 40 cents, and PYPY with 26 cents. And that does conclude the Group C ETFs. And next week will be Group D. And Group D will also have those same weekly pairs, but it'll also contain AIYY, AMSI, Apply, DISO, MSTY, Go MSTY, SMCY, Winter, XYZY, and YQQQ. So Group D is always one of my favorites. So we'll see next week what those will pay out. Let's just go ahead and find out what the Defiance funds will be paying out, as I do have a sheet for that as well. Okay, so this is the Defiance funds, and this one is their weekly payers. And this is for the ones that will be paying out on the 19th, which is this Friday. The X date, of course, being the 18th. And we'll start right off with WDTE with 14 cents at a 22.8% distribution rate. QQQY with 19 cents at a 39% distribution rate. IWMY 23 cents at a 52% distribution rate. USOY for 9 cents at a 61% distribution rate. And the last one in this group is GLDY for 9 cents at a 27% distribution rate. So that wraps up the ones for Defiance. And next, we'll look at the RoundHill distributions. And this one is also a weekly payout. This has the X date as September the 18th, right along with the pay date of September 19th, the same as the other ones. And there are 3 in this group, and this is XDTE for 20 cents, QDTE for 20 cents, and RDTE for 22 cents. And those all do the covered call strategies off of the ETFs as shown here in the list. And the last one I've got right here is for the ETF covered call strategies for Bitcoin and Ether. You can see that the X date was actually today, and it will pay out tomorrow. And the one for Bitcoin being YBTC for 39 cents, and for Ether is YETH for 39 cents. And that pretty much wraps up all of the distribution announcements that I am aware of. So now we can jump right over and we can check out the trade that I did today that earned me $300. Okay, so here we are on the Webull chart, and we're looking at SPY currently, and that's SPY. And before we get too deep into it, if you wouldn't mind, please hit that like button, and if you're not already subscribed, we would love to have you join. But today I was actually able to sell a put. And as you can see right here, I not only sold one, but I actually sold 2 puts. As you can see, there's a -2 right there, right? Meaning I sold 2 puts for SPY at 657 for a 0 DTE, meaning 0 days till expire. So that's considered a day trade, right? So I opened it and it closes in the same day. But for doing that, I earned a little bit of premium. But before we get that far, let's just take a look at the 5-minute chart, and I want to show you what it did, about where I got in, and then what happened throughout that day, because it was a crazy day today for SPY. All right, so we're looking at that 5-minute chart now, and I've got all the indicators and everything turned off on this graph just to help clean it up a little bit. You can see that it came out and it was right around that 660, right? And it was kind of moving up, moving down a little bit, and it hit as high on this candle right here first in the morning around about 660.66, right? So as you can see, it was a little bit crazy in the day, right? It did end up dropping some. Now, I actually got into this twice, right? The first put that I sold was just after 10 o'clock. So that puts it about right here, okay? And of course, before I go too far, I do want to draw in my lines here just to show you where I was looking. Okay, so I've got my lines now, and how did I draw those lines? Well, I go to the day before, and we'll just slide right over here to the day before, and I draw a line at the top, so the max that it hit, right, for that day, and the low, and I draw my line there. And that gives me my high and low for the day before. And that just kind of helps to give me an idea about the next day, right? Which would be currently this day, right? So I got into my first trade that I sold that put on, and it went through at 10:11. So that puts it about right here on this candle, right? So it started dropping down a little bit. I put my order in, and I put that order in for a sold put at 657, okay? Because right here, this price being 659. And I'm seeing it coming down, and it looks like it's wanting to get down close to this previous low, right? And I'm thinking if it hits it and then bounces off of it, I'm going to miss my opportunity to sell that put. But of course, on the flip side, if it hits it and then breaks through it, this thing can fall down pretty quick, right? So I had to make the decision, did I want to go ahead and sell that put when it got close to that line? Or did I want to see if it's going to break it? Well, I've been waiting for the last few days, waiting for it to break it. But each time it would get down to it and I would then look to try to sell it, but it would bounce off of it. So this time I decided, well, I could sell it at 658 or I can sell it at 657, way down here, right? Now that looks way down there because I'm zoomed in. That's only, $1 or $2 below that low. So it's not that far, right? But not knowing if it's going to break it and fall, I decided to put it at 657. And at that 657, that delta was still like 33, I believe it was. And that basically means I've got a 33% chance of it getting assigned. So the closer you get, the higher that number is, and therefore the higher the chance, right? So at that 659, it might have been closer to about 40 on the delta, right? So that would mean that I had a 40% chance of it getting assigned. And when I say assigned, I mean that price dropping below it, staying below it, and then at the end of the day, closing below it. Therefore, I would be required to purchase 100 shares at my strike price. So I decided to sell it at the 657 because normally I'm looking for a 30 delta. And the 658 was just a little on the higher side on that delta. So I decided to go with the 657. So I've got one contract about right here. And for that contract, I earned $1.36, right? And one contract is 100 shares, so that's $1.36 times 100, so that's $136 for selling that contract. And that's a put contract, stating that I am willing to buy 100 shares at $6.57 if the price of SPY is below it by close, right? Now, since it's a day trade, I'm not too worried about getting assigned early, right? I mean, could I? I guess it's always possible, but I don't think that's ever happened to me. Normally that will go all the way to expiration. So I'm not 100% sure if you couldn't get assigned even on a day trade, but I guess it would be possible. But anyway, I sold that 657 put, and that earned me, like I said, $1.36 or $136 for doing so. And when it went through, it actually started moving back up, right? And we were back to 659 area right here. So I was thinking, well, doesn't look like it's going to fall and trigger that buy. So I'm probably pretty safe. Of course, the day is still early, so nothing's guaranteed, right? So what did I do? Well, I saw it break below that low. And then it came all the way down to here, right? So now we're right here at this 12 o'clock area right here where I decided to sell another put, right? Because it did break below it. And I saw that put at that same price, $6.57. Because the premium now was going to be worth $1.65. So I earned another premium, and that one was worth $1.65 or $165, right? Of course, then it did drop around 1 o'clock right here, right? It actually came all the way down to 658.13. So had I waited until this point, I would have got probably about $2 or more for that same contract. But unless you have a crystal ball, you don't know what it's going to do. Because when I got in around that 12:15 is what my app is showing, you can see it was coming down, but then it started moving back up. And I thought, nice. I grabbed it and it's going to turn around and it's going to go back up into our little comfy zone up here. Well, it went up a little bit and then it fell back down, right? But it's at 658.13, so I'm still okay at 657 if I was not looking to buy those shares. But of course, I don't mind buying the shares because I wouldn't mind being on the call side the next day to hopefully also earn some price appreciation, because that's how it's really going to give me some extra money, right? Because then I earn that price appreciation on top of the premium. So let's just move throughout the day here. As you can see, it started moving back up, and sure enough, there it is. It's going up, and it's touching that previous low. And I'm thinking, well, there it goes, right? And then sure enough, bust right through it. And what time did it bust through it? If you notice the time, 2 o'clock. Well, what do you think happened around 2 o'clock today? That's right. They announced the rate cuts of the 25 basis points. And what did it do? Boom! It shot up. Look at this. It went up and it went up and it went up. So it went from that 659 all the way up to 661 in 5 minutes. So crazy. So I'm thinking, well, don't look like I'm going to get a sign today, right? I'm thinking this thing is just going to stay back in that 660 range, and I'm not going to get assigned those shares, but that's okay because I did earn a nice $300 just for selling those puts. But as fast as it went up in 5 minutes, look at the next candle 5 minutes later. Boom, big fall right there. So from 661 down to 660. Well, what did it do the next 5 minutes? Boom. Oh my gosh, look at this. And that's a 5-minute candle. All the way down to 657.83. Oh my goodness, what a fall, right? What a fall. And I thought, looks like I might be getting assigned those shares after all, right? And then what did it do? Well, it started moving up a little bit right here, right? So it was moving up some. It went all the way back up to 660 again before falling again. Look at this. Another drop from 660 down as low as 658 again. It actually dropped as low as 657.91. Crazy, right? Well, the ride ain't over. What happens to the next candle? Well, it does end up shooting back up to 659 in that 5-minute candle, but then falls, right? Look at this fall. All the way down to 656.83. I mean, we are going $2 to $3 per 5 minutes here, okay? And then the next candle, oh my goodness, did we fall. All the way down to 656.01. Before the next candle, we had a big drop as low as 655.34 and as high as about 657. Again, in just 5 minutes. And then the next candle. I mean, look at this. Is this not crazy? This is all over the place. And then we open that 5-minute candle at around 656.93. And look at this thing. Look at it. Oh my goodness. It fell as low as 654.31. Oh my goodness. I happened to glance at it and it was at 655. And I thought, wow. What in the world, right? My put at 657 is definitely challenged, right? I may be buying those shares at 657 and the current price being 655. And I was okay with that because the next day I can easily sell a call above my price, right? That would be no problem at all, especially if it did decide to move back up overnight. And that's what I was hoping for, is to get assigned those shares at around that 655 or maybe even 656. I mean, come on, right? And then hoping that it would jump overnight back to 660. And then I can sell a 661 call. And I bought them at 657. That's a $4 move. And if it sold at 661, I would earn $4 per share. That's $400 per contract, and I have 2 contracts. That's $800 in a day, right? Now, ain't none of this guaranteed, right? Because it could continually to fall, and you can be sitting on it for a little bit, and that could happen for sure. But what did it do the next 5 minutes? Look at this. It moved up, and it moved up, and it moved up, back up to 657.75. So we went from 654 to 657.75. And then, of course, the next 5 minutes, we're moving all the way back up to 658. And, of course, then the next candle, we're back into the 659 area. And then we're just bouncing around in that 659 and jumping all the way up as high as the 660 area here, right? And then we can just see it ended up closing at the 659.18. But this was one crazy day. And it started off somewhat pretty mild, right? I mean, it did drop, and I was able to sell a call right here, and then I sold another call, right? I sold one here, and I sold one about right here. But my goodness, look at this. Could you imagine if you would have saw it down here and then sold a call right underneath it? That would have been some very juicy premium. And then it just bounced and to take right back off. My goodness, what a crazy day. And if you were buying calls and buying puts, and if you had a crystal ball and you knew when this thing topped out and you knew the next candle was going to drop, my goodness, you can make a killing, right? But anyway, so I ended up selling those two puts at a 657 strike, expiring today. So they did expire. And since the price is above that 657, I did not have to purchase those shares. And if you add the two premiums together, that gave me right there at that $300 for the premium for just selling those puts. And that's some nice money for a day. And that's why I enjoy selling puts, and are quite aggressive if you ask me, a little bit on the aggressive side. And why can I be aggressive? Well, it's because when I look at that MA200 on a long term, it just moves up, right? And the candles up and to the right. And just like on the 1 year chart where it did dip, it still ended up getting above it. So if that did happen to me, yes, I could be at a point where I'm holding, especially when it drops down too low and I can't necessarily sell a call. I would have to hold and wait or try to sell a call further out in date, right? But once it got back above it, above my strike, then I can start selling more aggressive calls. As you can see, SPY stays up and above that 200 MA for the most part, and it is moving up and to the right. So that is the reason why I would not mind owning SPY and being able to sell that call, even though none of that is guaranteed to work out in my favor. But even if I had to hold it, holding SPY is not the worst thing in the world, right? So anyway, I do enjoy these. It is a lot of fun, and it gets me quite excited earning some $100 bills for a single day of trading on an ETF that I would not mind owning anyway. So to me, it's almost like a win-win situation. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button if you're not already. And also, please hit that like button. It does help the channel out. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.